Well, now we turn our focus to the deep sell-off in Indian stocks. The country's stocks started on Friday in the red, extending a sharp fall on Thursday when benchmarks marked the worst decline since early August. Concerns over a weakening economy and a pickup in selling by foreign investors have weighed on confidence this week. On Friday, both benchmarks started in the red in the previous session. The blue chip Sensex index tanked 1,769 points to mark biggest fall in 2 months. The broader Nifty 50 index slid 2.1%, the most since August 5th, to fall past its 20-day moving average. The gauge was the worst performer among major Asian markets, even outpacing losses in Hong Kong-listed Chinese stocks. This comes after a sharp surge that made the country's trillion-dollar market one of the most expensive in the world. Saurabh Rungta, Chief Investment Officer at F&0 Wealth Management, said, "Our internal model is indicating that the market is now in a relatively expensive zone." Rungta added, markets can be corrected by 10% to 15% at any point, and it is high time that we see taking it a breather. Foreign investors pulled over $750 million from Indian shares on Monday, the most since early June. That trend continued on Wednesday and Thursday. It looks no different for Friday as well. Santosh Meena, head of research at Swastika Investment, said there has been a notable outflow of foreign institutional investor money from India to China over the next few days. Meena added, profit booking ahead of state elections and concerns over elevated valuations have added to the downward pressure. And well, for more on this, we're now being joined by Andrew Holland of Avendus Capital. Welcome to World Business Watch, Mr. Andrew. First up, Indian stock moves reflect extreme fluctuation. What is your take on this week's trading pattern?
See, we've after hitting new highs, the market became, extremely overbought by all the indicators that we look at. In that, it doesn't take much, for the market to kind of retrace some of that, kind of gain. And what we've seen in the past 2 weeks is a combination of events. First off, China's huge stimulus package, which previously, brought a bit of skepticism. But I think that the market feels that this is part of the real thing now. So, we have seen flows moving towards China. It's been a huge move in the market there. And I think what's happened initially was that, if you take an emerging market fund, they might not have those flows coming in naturally at this point. So therefore, you need to get some money into that market. So India's been used as a funding for that, and that's why we see some selling by FIIs. But it's nothing to do with India per se. It's more to do with that the market in China is on a PE of 9, and if it was just to kind of go towards 10, 11, it's a huge increase in terms of the market caps. And then of course you had the geopolitical tensions in the Middle East, which has spiked up the oil price, which is never good news for India in terms of sentiment anyway. So I think those convolution of events really have just dampened the markets and seen that kind of move downwards, which has been a little sharp.
But Mr. Holland, just to take that point forward, domestic investors seem to have come to the rescue again when foreign investors have pulled out money from Indian stocks. What is your take on that?
No, I expect, the domestic flows to remain very strong. What we're hearing is that it hasn't, even with the market fall, flows continue to remain strong this month, the previous month and into this month. So I don't see that putting, investors off. I mean, they've seen markets fall before and then rebound and hit new highs. So the only thing I'd caution at the moment is that we're going into the earnings season. And I'm not expecting any. In fact, I'm probably more negative on the earnings season this time around than for many quarters now. So I think it's going to be a tough for the markets to kind of grab hold of the earnings and that being a catalyst. So I think the main catalyst would be any kind of easing of tensions in the Middle East and the oil price falling.
And my last question to Mr. Holland, what is your outlook for Indian stocks as we head into more volatile events into the year end?
Yeah, we got quite a lot of them, haven't we? We've got, I mean, next week we have the Reserve Bank of India. So, I think we're all hoping that they might pivot this time around. But I think with what's happening globally, they'll probably stay where they are. Maybe a more dovish narrative for a December rate cut, which would be good news for our markets. And of course, you've got the US elections and what that brings and who it brings, and what tariffs might be implemented globally. So, yeah, a lot of things before now in the year end. I think if we can keep around these levels, let earnings catch up again for the next big move, which I would see more in FY25.
Right, Mr. Holland, thank you so much for joining us on WION with your insights.